Hi, and welcome everyone to our budget update. I'm not going to waste any time on long introductions, other than to say if you've got any queries as a result of anything you heard in the budget, anything you read in the paper, see on the news, or you hear at the, I would normally say at the pub or the golf course, but of course you won't be hearing much of that at the moment, then the best people to ask, of course, are the people at Robson Laidler. Just a quick note, Robson Laidler is part of a scheme called B1G1, and for every person who attends today, we will give access to e-learning to somebody in need of learning across the world. So that's just a quick note. Thank you for participating and helping us to do that. And like I say, if you've got any queries, anything that you want to hear, then you can't ignore what Rishi says. He's basically saying we are the people to speak to. But without further ado, I'll pass you over to Victoria Bishop. Victoria, please.
Hi, thanks, Martin. Well, good morning, everybody, and to echo Martin, thanks for attending. I had a quick look at the headlines on all the newspapers today, and there's basically three themes. The first one is that this is the highest tax regime we've had for generations, biggest tax rises since Lamont in 1989, highest tax rate since the 1960s. It's also both the Financial Times and the Guardian have almost exactly the same headline, which is that it's a case of spending now and paying for it later. And the third theme is that really important topic, which is the Sussex versus Buckingham Palace arguments, but we'll move on quickly from that. So I think one of the really interesting things is what actually didn't happen in the budget. And so we didn't get those income tax increases that we were expecting. We didn't get the NIC increases that we were expecting, especially for the self-employed. The reform of NIC for self-employed has been rumoured to be happening for at least the last 5 years, but it's still not happening. There was no changes at all to capital gains tax and inheritance tax, something which I will touch on later on. There was also no help for the people who haven't had any help up to date, and this tends to be company directors who have been paying themselves at around £8,000 or £9,000 and taking the rest in dividends. There's still nothing for them. Pensions tax relief hasn't changed either. Again, it's been the last 40 years at least that we've been told that higher rate tax relief on pension contributions would end, but it still hasn't. And there was also nothing about the difficulty we have within tax of whether somebody is employed or self-employed and how that ties in with employment law, which of course ties in with the Uber decision last week. Now, we actually did a blog. There's a blog on our website on whether people are self-employed or employed, so you could have a look at that as well. So what did happen? Well, I'm going to cover the really important things first, which is that alcohol and fuel duties have frozen. So when you're at the pub or the golf course, the 19th hole, of course, for the golf course, yeah, we've got frozen duties. If you're wondering why tobacco wasn't mentioned, that's because that was announced back in November 20. It's either 2 or 4% above RPI is the increase on the various tobacco duties. We did get more COVID-19 support measures as we were expected, including the extension of CJRS. There was a CT increase as well, and also I thought I would mention, because I'm in the northeast, I've actually tend to live in areas where rugby league is the big game, but I know it's football around here. There's 2.8 million for a bid to get the 2030 World Cup bid. Another thing that is sort of a hangover from last year, the new rules on IR35 for medium and large companies in the private sector, they are coming in on the 6th of April. So if you are contracting for a medium or large company from the 6th of April, you are going to face complications. So let's move on to a few things in a bit more detail. So the furlough scheme, there's going to be no change until the 30th of June. But after that, the employers are going to have to contribute. So for July, the government will contribute 70% of the full-time rate, and the employer has to contribute 10%. In August and September, that employer contribution goes up to 20% of the full-time rate. The employer will still be paying NIC and the pension, as is had to do up, all the time. And also there is still that maximum payment of 2,500 per calendar month. There's a few more interesting things on the payments for the self-employed. So first of all, we've got this fourth grant, which is coming in, same as we're used to, as we've already said. But what is interesting is that it is now the people who are newly self-employed in 1920 and haven't been able to claim up to now, they are going to be able to claim as long as their tax return was submitted by Tuesday evening. They reckon that will bring in an extra 600,000 claimants, so it is good news. He also took the opportunity to announce the fifth grant, which will cover May, June and July, and you'll be able to claim in late July. However, there's a really interesting thing here where you are only going to get the full grant if your turnover has fallen by at least 30%. If the turnover has fallen by less than 30%, you're going to get a maximum, and I'm sorry, there's a typo in there. It should actually be 2,850, not 3,850. I just want to highlight here that we are looking at turnover and not profit. So if your turnover has stayed what it is, but your profits plummeted because of increased costs, well, tough is the Chancellor's opinion to that. We are just looking at your turnover, so we are going to have to do a few calculations there. There was also a clarification that when these amounts are going to be taxed, because you do need to remember that the SEISS is taxable. You also need to remember that it's the revenue that are paying this. They know exactly how much they've paid you, and if your tax return doesn't match up, then they're going to be adding up the dots and everything. But anyway, the grant is going to be taxed for the fourth and fifth grants in the year of receipt, so you're not going to have to put them in the previous year's tax return, which we did think. So that was a clarification as well. A few other COVID-19 reliefs for businesses, lots of different things here. I don't intend to go through them in detail now. Obviously, if you do have any specific questions, please put them into the meeting chat and we can address them afterwards, or get in touch with your normal Robson Laidler contact, and obviously we'll be pleased to get back to you whenever you need to. Just want to highlight the VAT issue. We're going to have 4 different VAT rates in the system now. The 5% rate for hospitality and heritage sector. Then from October to March, that 5% will be 12.5%, and that's on top of the normal rates. I've seen a bit of commentary that this is going to make software developers very happy. It's not going to be straightforward software. So that's some happy people anyway. If we then look at the individual reliefs, there's a few bits and pieces for people at the lower end of the income spectrum, which may not affect you individually, but they may affect your tenants or relatives. And the test and trace 500 payment is actually taxable, so that's going to be interesting to see how that works. But 2 things that I think is quite important is that the working from home allowance, now normally there's very, very strict rules for these. That was relaxed last year for the 2021 tax year, and that relaxation is going to extend until the 5th of April 22. So that means certainly everybody at Robson Laidler, and it could well be a lot of people in your businesses as well, are going to be able to claim that allowance for another year. It's not going to get you to Barbados when we're allowed to go to Barbados, but it's better than a slap in the face. Also, the tax-free status for COVID-19 tests, which may be paid by the employer, is also continuing. So that's another way that employers can keep their workforce safe and without any tax consequences. So let's move on. And I'm still going a bit like that, to be totally honest, when we come and look at the corporation tax changes. And this is, I think, where all the excitement is. You'll have to excuse me, I am a tax professional, I get excited about strange things. So we've got a few things on the corporation tax issue. And the first one is this increase in the rate from 19 to 25%. Now, it's as ever, it's not as straightforward as we think it's going to be. The 19% rate will cover profits up to 50,000, and then between 50 and 250,000, there'll be a marginal rate, and the 25% rate doesn't hit in properly until 250,000. That is profit I'm talking about there. I was talking about turnover a couple of slides ago. I'm just highlighting we're now back onto profit. Now, quite a few issues here. The one of them is probably quite a good thing for Robson Laidler, because it means lots of calculations have got a bit more complicated. So in order to give our clients the best advice, we're going to have to do a bit more work. However, it's also just turning back the clock, to be totally honest. We're, yeah, you might have hoped that flares would never come back, but they are, and this time it's in the case of marginal rates. So if you're immediately thinking, oh, well, I've got £100,000 of profits, let's just split it into two companies. Well, that probably won't work, because there's old rules that are going to come back into play, where if companies are connected, so for example, if they have the same directors, same shareholders, then they will have to share that 50,000 limit between them. The other, I think, that's really important to say is that 50,000 is really not very generous at all. The Chancellor went to a lot of effort to try and say that it was, but it's really not. If you think about, let's talk about £100,000 worth of profit again. If you've got two shareholders / directors, then that's 50,000 each, but you're going to get less than that because your corporation tax liability is increased, so your take-home pay is going down. If you've got, say, 4 shareholders directors, and this is not unusual in the family business, where you might have the older generation and then a child and their spouse, or the 2 children or something, you're dividing that 100,000 less the corporation tax between 4 of you. So not necessarily as good news as you might have thought. But we'll see how it goes anyway. The other thing about corporation tax was the losses. Now, the losses do apply to income tax as well, and you're also going to be allowed to carry back losses for 3 years rather than the normal 3. Now, there are some restrictions if you are going back more than 1 year. There's a maximum of 2 million losses that can be carried back to each of the earlier years. But again, this hopefully will give some help to companies and businesses, whether unincorporated or corporated, going forward, when we are trying to establish profits and losses for the last 12 months. Just to go back as well to when we were talking about the new corporation tax rate, it's obviously going to change the level at which it might be beneficial to pay dividends rather than a bonus. whether if you are unincorporated and you're thinking about moving to a corporate vehicle, then it's going to affect those calculations as well. Now, Graham spent most of last night looking at some of these figures, so I have got some details, and it is actually at 300,000 of profits, you are definitely going to be better within a company. But up to that, the rates, the decision is marginal. There's so many things that you need to think about, how much you take out of the business each year, things like that. So again, it never has been a straightforward decision, even from a tax point of view, whether to incorporate or not. And this marginal rate is just going to increase those complexities. Right, the next one we're going to look about is the super deduction, and I do know there's at least one person listening who this is why he's here, so we'll get to it. And I'm afraid I'll apologise because it's not really half as super as you might have thought it would be. You can see the logic behind it. This rule is going to run until March 23, when the higher corporation tax rates come in. He's clearly introduced this so that people don't hold back on the capital expenditure until 23, and when they'll get the 25% tax relief. He wants people to start spending now. So it's quite a clever way of trying to spend our way out of the COVID recession. It is for companies only, so if you are a sole trader or in a partnership, then you're not going to get this. When it finishes in April 23, you're going to have to do some calculations to make sure you get the right amount of relief and things like that. And the good news is that although it's for expenditure from the 1st of April, if you've entered into a contract from yesterday, i.e. budget day, then that should be able to count. So you may want to delay completion of any contracts until then. One interesting thing is that second-hand and used assets don't count towards this deduction. So you do need to be buying new bits of kit. The other thing you need to remember is that we have actually still got a very high annual investment allowance. That's £1 million until the end of December this year, and then it goes down to 200,000. The super deduction as well, it is only the 130% for assets that would get capital allowances at 18%. If you have any assets such as short life assets, or what we call integral features within a building, where you get a much lower capital allowance rate, you're not going to get 130%, you'll only get 50%. Now, in that case, you would probably be better to claim the AIA, because you're going to get your full 100%, because that's what the AIA is. So we are going to have to think about that and make sure that the calculations are correct. Something else that you probably need to think about is how long you are going to use these assets and what you're going to do at the end, because there is basically a clawback when you dispose of any assets that have benefited from the super deduction. Basically, if you sell something for £500,000, then you will be taxed on 500,000 at 1.3. So really, the Treasury is clawing back that extra relief when you sell the property. So if it is something that you're thinking of selling quite quickly, it would be a cash flow benefit, but you need to take the bigger picture into account as well. So a few things that we're not totally convinced about right at the moment. Please sort of forgive us, bear in mind that this was announced less than 24 hours, so we're obviously going to be looking at it in a much more detail, and as with all the topics in the budget, we will be updating our clients, we will be putting blogs out on our website. keep an eye on social media and stuff like that. And again, any questions about super deduction, add them to the chat. So if we move on to two other things now, research and development. I can't see you all, but I've got in this image that probably a lot of you are thinking, oh, research and development, it doesn't apply to me. I'll go off and make myself a cup of tea. Whilst I can appreciate you might be getting fed up of listening to me, research and development the tax reliefs, they apply to a lot of different businesses. It's not just your stereotypical person in a lab coat in a lab somewhere. So anything that you're doing that's new in your firm, in your sector, could be doing it. So if you are a software developer, that is obviously research and development, as well as developing COVID vaccines, but it could be something else that you're doing. Is it something new in your cafe business that you're having to now make it into a takeaway or a delivery business? Is there something that you're doing? So please talk to us. We've got a dedicated team here. Jack Spohr will be able to help you on research and development. The reason I'm talking about it is that the government's announced a further consultation onto this to see whether it needs to widen the application of the relief, and to see whether there's anything, whether it can improve the working of it. It's also worth noticing that last year it was announced from the 1st of April this year, there is going to be a restriction on the amount of R&D relief that you can actually get. Again, getting back to us, we can give you precise details about this. The enterprise management incentive, that's a share scheme. And again, yesterday they announced a consultation into how this works, and hoping to improve the way that it works and to make sure that it does target what they were hoping to target. The main thing was to help SMEs recruit and retrain their employees and keep them with them. The next other thing that has been getting a lot, these are the income tax rates. So they're going up on the 6th of April. That was all announced back in November. So we've known these rates since then, but they are going to stay like this for 4 years now. Now, being a bit of a cynic, when it comes to the year before the budget, are we suddenly going to get not the budget, the next election, are we going to get an increase to some of these rates? We probably are. So let's be a bit cynical about this. Worth mentioning that, as all the commentary is saying, this is really stealth taxation. He's saying that we're going to get the same in our pockets. Well, perhaps we are, but inflation will almost definitely go up. We're going to be able to pay less at the end, buy less at the end of the day. So it really is, is going under the fence here to bring this in. Going to just mention again that I mentioned right at the beginning that there has been no change to the rates to capital gains tax, despite lots of speculation, including by myself. I'm prepared to put my hand up and say I really did think that capital gains tax rates would go up. Interesting though, if anybody watched the press conference that he did last night, the last question he had was, he was specifically asked to rule out capital gains tax increases for the rest of this Parliament. He didn't answer the question. So again, going to be a bit cynical there. I think that means that we could well get a capital gains tax increase at some point over the next couple of years. So the other area that is getting a lot of publicity is, of course, stamp duty, land tax, and the current extension to the nil rate band is going to continue until the 30th of June. It will then be halved to 250,000 until the end of September, and it's not going to be until the 1st of October that it's going to be back to its normal nil rate band of 125,000. Worth pointing out that if you are buying a second or subsequent residential property, the 3% surcharge still applies. So if you are a landlord, you don't have nil SDLT, you are going to have an extra 3% to pay there. There's also been a bit of commentary about whether this is actually as good a thing as it's been made out to be. In some areas, the holiday is increasing the market value of properties by so much that the increase is actually more than the stamp duty would have been in the first place. There's at least 2 members of the tax team that are looking at buying a property at the moment, and I think we're perhaps not totally convinced by this, but obviously, again, we're not going to look a gift horse in the mouth. So, coming to a couple of the last 2 slides now. As ever, and again, this is one of the regular things, we could put this slide on every year. There's going to be more funds given to revenue to target tax avoidance and tax evasion. They're going to do this through both investment in staff and also income tax infrastructure, IT infrastructure. The reason we've got this little equation here is because those of us that are old enough to remember the olden days, customs and excise were always a lot stricter. The penalties were always a lot worse than they were with the inland revenue. And this is continuing because, as well as the extra funds, HMRC is going to look at streamlining late submission and late payment penalties. So I think that's clearly going to go more the VAT way. We're going to be looking at, they've said we will be looking at a point and threshold based scheme rather than the basic £100 for first failure that we've had ever since self-assessment was introduced. They're going to introduce these from next year for VAT in 2023 for self-assessment. So again, this is going to have to be established quite quickly and see what's going on. So we come to a few sort of things I thought I would just round up here to do with, well, I'm saying local issues. So obviously we've got the new free port at Teesside. I've read that they're hoping that might bring in 18,000 extra jobs to the area. There's also, of course, the supply chain. So, there might be something coming our way there. Darlington is going to get the new offices for HM Treasury. I'm not sure why they're calling it a campus when, as far as I can say, they just mean offices. They're just trying to make it sound posher than it is, I think. There's the A66 upgrade west of Darlington. They're getting the money for that to dual that. And Hartlepool is getting a share of £18.8 million for local culture projects. There's also a couple of towns, Middlesbrough and Thornaby-on-Tees, are getting some money under these new town deals to help town centre and things like the Renaissance and things like that. What strikes me is that I've always complained that subsequent chancellors don't really seem to know what the north is. We've very definitely here got a barrier, I think, just about at Scotch Corner. Anything north of Scotch Corner, they don't seem particularly interested in. So, Tyne and Weir not being mentioned, even though there is quite a lot for the Tees area. So, interesting there. So I was amusing myself yesterday. There was a lot of jokes on Twitter yesterday about the 2 S's in Teesside. Apparently, all the southern journalists weren't able to spell Teesside. So that is it. Very, very quick, but hopefully have covered a lot of issues and hopefully given you a lot to think about. And as I say, we want to go and have a discussion now, answer questions, listen to what you think. even, between us, we have different things that we want to talk about. And as I've been saying throughout, please do get hold of us. I saw that Jack put a link out on the R&D to contact him. So over to Martin again. Thank you.
Yeah, thanks very much, Victoria, for a cracking summary of what's going on. We did get one question in the chat, which not everyone might have seen, but it was from Joe. And the question quite simply was, does the super deduction include land or investment property? Kerry-Ann has already answered it in the chat, but for anyone who's not in the chat, the simple answer is no. But as always, it's a bit more complex than that. So some elements of some properties do actually qualify. So it's a complex question. But if you're a landlord trying to buy a couple of resi buy-to-lets, no, it doesn't apply. If you're commercial or you're buying something commercially, there will be an element that might, but you do need to check. Also on I suppose if you're buying a commercial property, the fact that it needs to be a new asset might disqualify a lot of the things that otherwise might have qualified anyway. So as always, it's nice and complicated. We have another question. Is there an extension to the deadline for CBILS loans? I don't think there was, but there was a whole new raft of new loans, which was one of the slides that we said we wouldn't go into in too much detail, but there will be a summary coming out.
I'll have a quick look and see whether I can find anything on that, or if any of the rest of the tax team can, if you want to sort of start.
Hi, it's Graham here. I think the CBILS loan is getting replaced by the business recovery loan.
Yeah.
Someone's saying thanks, Victoria. I think that's Jack for plugging Jack. So Michael said, was there announced £900 million for arts, also museum status? I don't know if that's a question, Michael, or a statement, but yes, there was money allocated towards, it's not just footy in the Northeast, Michael's reminding us, I think. There was money for arts and other things.
Yeah, well, as I say, that seems to be part of the Hartlepool sort of 6 million or something it is for cultural things, so yeah.
Yeah. Sue was asking if there's any help available to sole traders of a deli or a cafe with regards to setting up deliveries, etc. I know there was some money being given to people implementing new technology. I think you referenced the software development. Oh no, it was a different point there, wasn't it? I'm not sure there's anything specifically for that kind of help. Sorry, Sue, but sorry, go on.
I was going to say, there is something to do with sort of digital implementation and helping smaller businesses with that sort of thing. So I wonder whether you might be able to get that.
Yeah, you might be able to piggyback in on that.
Yeah.
Somebody else just saying thank you. So Jack's put a quote in here from HMRC. A new recovery loan scheme will be launched to replace the existing government guarantee schemes. So the £73 billion have been put into the new lending. So EBOS, that might qualify. Whether or not that's something that you can buy off the shelf and therefore doesn't need help with, I don't know, but we can certainly look at that. Carry-on saying there are £5 billion of restart loans as well, if it's a case of reopening up the deli in April. So there might be a restart loan you can look at there, Sue. Matthew's saying, can we go into the business recovery loan side of the budget? We're probably still trying to look for the details on that, Matthew, but we are sending out, I think you're on our list. If you're not on our list, put your email in the chat. But we will be sending out a summary with links to the full details and the full kind of guidance on these things. So we haven't got too much more to say on that at the moment, I don't think. Sorry, Matthew, but we're happy to look into it. Does anybody else have any questions? You don't have to use the chat. You can unmute yourself and shout out if you want. Look at that, Victoria. It's so comprehensive. There are no questions.
Either that or everybody's shell-shocked.
Yeah, or asleep. It could be a mix of things.
I can add a little bit just on the business recovery loan. It's so if you've applied for a CBILS or a bounce back before, that doesn't preclude you. You can apply for this new loan, a business recovery loan. I think it's going to start in April, the 6th of April, open until the end of the calendar year. So open until the 31st of December 2021. And I think it's just loans between 25 grand and 10 million per business.
Yeah.
Okay. It'd be very similar, I guess, to the CBILS, I think. No personal guarantees, I think, on the first 250 grand of any loan. So that's what we know at the minute.
Yeah, and on the restart grants, it's going to be £6,000 per premises for non-essential retail businesses, and up to 18,000 for hospitality, accommodation, leisure, personal care, and gym businesses. So,
is there any clarification as to what counts within that remit of non-essential? It's quite a big category, non-essential. I'm just aware that some industries like our own, we're not essential, but at the same time we've been open.
Yeah, so, well, it does say non-essential retail businesses, so I am taking that to mean things like shops, rather than what I might call professional services.
Retail is defined somewhere as, I think the idea to simplify is where people come in to buy stuff. So
I know, I just know that we've been classed as both. We were classed as retail when it came to some things. Not that I'm expecting anything. I was just wondering whether there was any more clarification on who would be exempt from that, and whether it's just an automatic thing or an application kind of based thing.
Yeah, I just wonder whether there could be confusion between premises and businesses here. And you could well be classed as retail for a rates purpose, for example, but for this purpose you might not be retail. Obviously we don't actually know the answer at the moment, but it'll
be the local authorities who will be dishing out those grants, and it'll be the local authorities that you need to make your application to.
Sorry guys, I just missed part of the sentence earlier. Was it just loans or grants available for when you've seen that, like the retail and does it count if you've been able to stay open but on reduced trading?
Was that the restart?
Yes, I think it is. Now again, it doesn't say whether if you have been continuing to trade throughout on that, but basically the loan scheme and the grants are separate. It's possible to have both. I think so much of this is specific to people's individual circumstances, but reading this, I think the restart grant probably will be available.
So could that class towards any like refurbishment as well? I'm currently closed down for kitchen refurbishment because we were very small and old-fashioned, and we had to trying to keep up with the times and move with what was happening. We're having to get a lot of new equipment, etc. in. So is there anything on that lines that would be available?
Well, what the government blurb says is it's to give the businesses the cash certainty they need to plan ahead and safely relaunch trading. So I would have thought, there's no real rules on what you can use the grants for. I mean, obviously, don't go on holiday on it. But yeah, from what you're saying, that sounds as though that's bang on target, isn't it? It's the sort of thing that they want. They want small businesses like yours, Susan, back up and running. And, if you're able to improve your equipment so that you can improve your trading, that sounds spot on to me.
Great. Thank you very much.
Is there anything else?
Victoria, could you just re-clarify the corporation tax loss carryback that you mentioned? I think I might have misheard you when you said you can carry back 3 years in opposed to 3 years.
Normally you can only carry back 1 year, but you are going to be able to carry back for 3 years. Again, it's basically for the next 2 years. And so yeah, if you can't use all your losses in the last year, you can go back another 2. There are some anti-avoidance rules, and that is where the £2 million came in that I mentioned, that you can carry back as much as you like to the previous year, but if you are going to make use of the extra 2-year carry back, there are some restrictions on the amounts that can go back.
Victoria, can I just add a couple of things in there on that, on the carry back of the loans? So obviously you need to do some modelling, because if you carry back your loss, you're going to get that loss relieved at 19%.
Yeah.
Whereas if you don't do the carry back, you carry it forward to offset against profits, which may be getting taxed at a higher rate of 25%.
Yeah.
Yeah, so you've got to do the modelling and which is the better option for you on that. And in addition, we need some clarity on this, because for companies, its losses end in your accounting period ending on or after the 1st of April 2020 through the 31st of March 2022. So does that mean if your year end is the 31st of March 2020, you can't carry back that loss? Whereas if your year end is the 30th of April 2020, you can carry it back?
It does sound like that,
yeah.
Yes. Yeah.
And
I mean,
similar,
can I just...
Yeah, sorry, go ahead.
No, I was just going to emphasise that when you were talking about, how to use the losses, it's some of that background work that we do at Robson Laidler that perhaps our clients don't always appreciate that we do. And obviously we would be looking at that as a matter of course to make sure that all losses are dealt with in the most beneficial way. But yes, it is the issue with the years as ever that we've got the years that it's talking about, because for this extra 2-year carryback does apply to unincorporated businesses as well. And it's for people, it's for the tax years 2021 and 21-22. So somebody who had a loss in, let me think, in their accounting period to April 20 could potentially make use of this. Whereas, as Graham's just highlighted, a business with a 31st of March year end won't be able to.
I think the interesting point on the carryback is if you're struggling and you've got no reserves of cash behind you, you'll have to use the carryback. Whereas ironically, you might have a business that's financially strong but still had a loss. They'll be able to sit on that loss and carry it forward and get a more benefit from it. So I suppose you might also consider the use of the loss, but also whether or not you take advantage of one of these new loans to kind of get you over to the higher future, tax credit. But yeah, it's certainly going to be complex. We've had another question in. There hasn't been any new taxes for online sales as rumoured, but has the Chancellor mentioned about whether he is considering it in the future? There certainly didn't seem to be any attack on the big tech or the online world as we saw. Kerry Ann's mentioned there are some interesting things going on in Australia at the moment. Certainly on is it Australia versus Facebook at the moment? Is that a fair way to summarise it? Or Australia versus Google? So there's some interesting things moving in the world on that, but there's nothing concrete at the moment, I don't think.
I'll be sorry, it's me again, shamelessly plugging the R&D, but I'd be interested to hear your thoughts on the consultation that was announced and kind of where do you think it might end up, if there's going to be potential sweeping changes.
Yeah,
because I think our R&D was certainly stuck certainly in terms of the state aid stuff was stuck by restricted by the EU rules, but post Brexit that obviously gives them a bit of freedom, and I assume that's why the consultation has been announced in the budget. But yeah, sorry, interested to hear your thoughts on that.
Well, I personally tend to agree with you, Jack, exactly. I think that, as you say, this was previously hampered by EU state aid rules. We don't have that anymore. They say that they want to raise total R&D investment to 2.4% of GDP by 2027. So that is what they're looking to do. They want to, you know, increase what's happening already. They're looking at whether the current definition of R&D should be amended, so to include more activities. Whether the claims process can be improved and simplified. I'm going to laugh here because we're talking HMRC. Of course it can be improved and simplified. There's nothing that couldn't be improved and simplified. Merging the two schemes, because as Jack will know, there's two variants that we do. Looking at whether there is any way to stop the boundary pushing that is perceived to be happening with the no-win, no-fee agent. So that again is a bit of anti-avoidance legislation there, which doesn't affect us. And whether the activities should be limited to within the UK only. Now, I don't know, Jack, do you look at a lot of claims that might have overseas activity? Do you think that, what's your view on that?
I don't. The claims that I've been involved with haven't massively been involved around certainly outside the UK. I mean, probably the closest I'll get is offshore projects, which I don't know, depending where they sit, and then we're suddenly getting into international boundaries and all of that stuff. It gets a little bit confusing. But yeah, it doesn't seem to be a huge issue. The restriction of it being of the UK. It was interesting just to see that one of the areas they weren't going to touch was, apart from the pay-as-you-earn cap, which you noted already, was they weren't really looking at the state aid rules, were they? Which I would have thought would have been, if they wanted to really, boost innovation in terms of GDP, that would be one way of looking at it, and kind of relaxing the notified state aid rules. But they interestingly kept away from that, which
I think that throughout this budget, it's a really interesting to think what if, and I can't help thinking that 12 months ago all the planning would have been around Brexit and a lot of the issues around the state aid rules and things like that, and COVID-19 has just taken over, and I do wonder we'd have had a lot more interesting, let's use that phrase, developments if it wasn't for COVID. But yeah,
I think we're pretty much close to an end here, but we'll have had one more question. Has there been any hint of basically paying back the grants that have been dished out, or will it just come gradually from tax? I think it looks very definitely like if you've had a grant, it's yours, and if you make money in the future and it's taxed under corporation tax, it seems at the moment, then that's where the repayment is coming at the moment. Of course, who knows? We've got a couple of years more's worth of budgets coming up, and a lot still happen on that story. But at the moment, it looks like the grants are not repayable. I suppose there's always the chance that you didn't qualify for the grant and you never should have had it, which is a different thing. But if you did qualify for the grant, it looks like it's yours as far as we can tell at the moment.
Yeah, I think, can I just pick up on something there? Because I said about, the revenue are going to invest in more staff so that they can do more inquiries. Just to highlight that actually, again, a blog went live on our website this week. They are actively looking at furlough claims, CJRS claims. We've had a couple from our clients. They've been okay, no issues. But just be aware, they're expecting to look at 25% of all claims. So just on law of averages, some of you listening to me now are probably going to have to face an inquiry into any CJRS claim. So bear that in mind. The other thing
thanks for that, Victoria. Nobody's going to come on our webinars anymore if you tell them that 1 in 4 are going to get an inquiry.
Yeah. even though they're doing everything right, and that's what's irritating. And it's what we've said in the blog, it's really irritating. You've done everything right, you've got all the records, but you've still got to prove it. There's no innocent until proved guilty in the tax world. It's the other way around. So that I think
it's worth saying though, Martin, sorry, it's just worth quickly saying that most queries that you do get, if you've done it right, they're actually very simple. It is a nuisance, but if you've got it right, you send the info in and you're off the hook.
Yeah, Michael Moran is reminding us that we do offer a tax inquiry insurance. So if you're interested in that, please get in touch with us and we can do that. Like all insurances, you might think, do I need it? But when you do need it, by God, it pays for itself. So, yeah, it can cost a lot just to prove that everything's in order. Can I quickly mention one? Go on, Chris. Yeah.
Just with regards to portfolio landlords and profit, kind of future profits, so kind of 2023 onwards. I think it was, Victoria, you referred to it, but I was trying to sort out homeschooling at the time. Is it per company or is it based on the individual? So if I'm a landlord and I've got 10 properties in 10 different companies, each making under £50,000 profit, or is it literally my class as my portfolio?
Yeah, so there used to be a lot of rules, Chris, on connected parties.
Yep. And
basically, if you control 2 companies, the 50 is aggregated across the 2. So there's a lot of old rules that stopped mattering because everyone just had a flat rate of CT. And this is where Victoria was alluding to the fact these were the flares. This used to be part of everyday corporation tax planning and seeing whether companies had associated companies, connected parties. And there's a whole raft of kind of legislation that nobody's looked at probably for the best part of 20 years that all of a sudden is going to come back in. But it's certainly, it's not as simple as just saying we'll split the trade. I mean, as soon as I saw this, it reminded me that for VAT purposes, people try to split trades already to avoid the VAT turnover. And the classic is the pub that sells meals where one spouse is the kind of the food side and the other is the drink side. It's clearly a single business artificially split. And I think we'll have people trying to do exactly that for these purposes. But if they're controlled by the same people, it won't work anyway.
Yeah. So, there's another issue as well about these 2 rates that Martin and I were discussing yesterday, that a certain type of company, which is called a close investment company, and basically in your circumstance, Chris, if you've got any properties that are let to relatives or to your business, then that company is automatically taxed at the higher rate. You don't benefit from the lower rates anyway, and that rule is coming back as well. So if you're renting out to third parties, no problem. But as soon as you start renting to an organisation or an individual that is somehow connected to you, you might find yourself slap bang into the 25% regime.
Yeah, regardless of profits.
Yeah, yeah.
But yeah, so these are the old rules that we need to dust down again, get off the shelf and have a good look at. But yeah.
Yeah, one thing I just want to mention, and I apologise for not saying it during the presentation, was something else to do with the super deduction. That doesn't apply to intangibles. So looking at goodwill, patents, things like that, we are looking at actual pieces of kit rather than intangibles. And I just thought it might be worth mentioning that as well.
Victoria, I don't think it applies to cars either.
Yeah.
And I think we'll have to look at the legislation about assets acquired on HP.
Yeah.
Because I think there's some rules around that as well. So. Yeah.
I mean, a lot of the commentary seems to think that the main people to benefit from these will be the leasing companies rather than actual businesses. But we'll have to wait to see what it actually means in the real world.
As always, a lot to think about. And actually, the more we get into it, Graham, was that you jumping in again?
Yeah, it was just one last thing. I think Victoria might have mentioned it, so apologies if I'm repeating it, but there are some announcements due on the 23rd of March with regards to what we call consultations. So I know there was silence in the budget about capital taxes, capital gains tax and inheritance tax, but we wait with bated breath for those consultations on the 23rd of March, because I think that will give us an indication of the direction in which the Treasury will be going in terms of those capital taxes and any other stuff. So that might be another webinar, maybe.
Right, yeah.
We're
We'll
also
keep an
looking
eye on that. We'll certainly be putting something on the website, because obviously we have been pushing, you know, our belief that there will be changes to the capital taxes. So, as I say, we'll wait to see what happens on the 23rd of March.
We're probably also going to be putting a webinar on specifically for property investors, because the question we get asked all of the time since 2015 is, should you be a landlord personally or through a company? And of course, another 6% on rental profits plus 6% on capital, you know, sales through companies will shift the dynamic for some people. So I've already spent a couple of hours yesterday evening chatting to a couple of landlords panicking about this. So we'll definitely be doing something on that pretty soon as well.
You mean the answer isn't just yes or no, Martin?
Definitely not, Chris. Surprisingly, there is no easy answer.
Surprisingly, isn't it?
Yeah, and I don't know what the Office for Tax Simplification must have been thinking yesterday, but you know, Victoria, I think you mentioned it yesterday, but they must have been shuddering when they saw that the marginal rates were coming back in for corporation tax and things like the super deduction. These are not tax simplification by any measure. But we've hit 10 o'clock. We said it would be an hour. If you want to leave, now is the time. Duck out. We won't judge you. If you do want to hang around, feel free. But that basically draws to an end the formal part of the webinar. Anyone who wants to hang around now is pretty hardcore and has got some questions they want to bounce off our team. But thank you very much for attending. And I think we can all say thank you very much, Victoria. That was a fantastic summary of what happened yesterday. Thank you very much, Victoria.
Well, thank you. And can I just call out the rest of the tax team? It was very much a joint effort of all of us looking at what was announced. So I'm just the front woman. The hard work is done behind me.
Yeah, that was like an Oscar acceptance speech, but without the tears. Okay, thank you very much, everybody.